Knowing what's going on in the economy is one thing, influencing it is quite another. But there would be no point in knowing what's going on unless the instruments also existed to exert an element of control. Central banks are in daily contact with commercial banks and other financial institutions and conduct a number of operations with them. A central bank is effectively a bank's bank. Just as members of the public hold accounts with commercial banks, so commercial banks hold accounts with central banks. Through these accounts, all the operations between central banks and commercial banks are conducted. And it is through these same accounts that transactions take place in the money market, a market where banks lend each other huge amounts of money for short periods of time. The European Central Bank, like other central banks, can influence the level of interest rates in the money market. The conditions there have a considerable impact on all other interest rates, and in turn on prices and on the whole economy through a variety of channels in a complex process known as the transmission mechanism of monetary policy. The ECB has a range of monetary policy instruments at its disposal. The most important of these are the main refinancing operations. In these operations, the ECB, through the national central banks, lends money for a week to the commercial banks, which bid for it in a weekly tender procedure. In technical terms, this is what is known as providing liquidity to the market. On these loans, the commercial banks pay interest and have to provide the euro system with a guarantee in the form of appropriate financial assets. When the transaction reaches maturity, the banks pay back the loans and the assets used as guarantees are returned to them. The ECB sets what's called a minimum bid rate for the main refinancing operations, meaning that it won't provide liquidity to banks at a lower rate. The minimum bid rate is set once a month by the ECB's Governing Council. Banks need liquidity to finance their operations, so they bid for it in a weekly tendering procedure. These bids are normally collected from Monday afternoon through to early Tuesday morning. They're first analysed by a liquidity committee. The liquidity committee submits a proposal to the executive board, which evaluates it and then sets the total amount of funds to be allocated. The banks offering the highest interest rates in return for liquidity will be served first, until the full amount has been allocated. The banks that fail to obtain funds from the central bank have to borrow them in the money market. However, rates in the money market are usually quite close to the minimum bid rate set by the ECB, proving that this is an effective instrument with which to influence market rates. Banks can also borrow from or deposit money overnight with a Eurosystem central bank as and when they need, for any reason, without waiting for the ECB to carry out market operations. Through what's called the marginal lending facility, banks can borrow money, while the deposit facility permits them to deposit surplus funds. These are also called standing facilities because they're always available. The rate on the marginal lending facility is higher than the minimum bid rate, while the rate on the deposit facility is lower. These rates are set monthly by the Governing Council when the minimum bid rate for the main refinancing operations is set. Another important instrument is the minimum reserve requirement, which is the minimum amount of average liquidity that the ECB requires banks to hold over a certain period of time. This requirement helps to stabilize money market rates and increases the dependence of banks on the liquidity provided by the ECB. For the transmission mechanism to work, however, it's not just enough to have an appropriate set of instruments. There must also be a properly functioning money market, meaning banks must be able to transfer huge amounts of money to each other at low cost. Here too, the ECB plays a major role through its involvement in Target 2, which stands for Trans-European Automated Real-Time Gross Settlement Express Transfer, an automated payment system set up to ensure the fast and smooth settlement of interbank transactions in the euro area. Target 2 replaced the decentralized structure of the Target system with a single platform at the end of 2007. The ECB, in cooperation with the national central banks, constantly monitors the flow of payments through the system and is ready to take action should the flow ever, for any reason, be obstructed.